Well, welcome to 2024, the year of the EV tax credit becoming point of sale. Now, it should be as simple as just that, but unfortunately, this is the government we're talking about, and the law is not very clear. However, I have dove deep into the details many times at this point, and I have broken this down in a way to make this as easily understandable as possible for normal people like you and me. So in today's video, I'm going to share with you what this point of sale tax credit means, how it's applied, why you may or may not want to use this point of sale tax credit. And there's a couple of loopholes here to help you if you may not necessarily qualify for the tax credit as it sits today. There's so many complications here with this tax bill, and because of that, it does make it very difficult for people to understand if they do or do not qualify. So at the end of this video, you should have a pretty good understanding of not only do I qualify, but also should I or should I not take the point of sale tax credit that is now available to me starting today. All right, so the first thing I want to do here is go over this updated guidance from the IRS. Now, you've probably seen something like this before, but in this case, what we are talking about is a newer one from December 29th. So this is just a couple of days ago. They did make some updates to this guidance, which is helpful, although it's not going to answer every question you may have. There's a few things here that we need to go over to make sure that you understand what we're looking at. Now, the biggest takeaway from what I'm reading here in this tax bill is there is further emphasis on this being a non-refundable tax credit. Right here, because these FAQs were not published, they may not be relied on by the IRS to resolve a case. However, a taxpayer who reasonably in good faith relies on these FAQs will not be subject to penalty for reasonable cause. So basically what they're saying is that these are not set in stone. They can be changed, as they have been changed a number of times to this point, but it is, as long as you are doing this in good faith, following this guidance, you won't be subject to penalty. Basically, hey, there is a new tax credit here that's available. Here are the rules for those tax credits. In addition, you can find the list of qualified vehicles at fueleconomy.gov/new tax credit, which we can go there later because it has been updated. It further highlights the rules for the $3,750 combined, which gets you to the $7,500 tax credit. So the nice thing here is it has outlined basically the rules here that you would need to know in order to find out if you are qualified. But as we scroll down to topic B here, this is when we start to get into the bigger questions that are going to pertain to most of you. So basically, here are your income limits, and this is really important. 300K for joint filers and 150K for individuals. This is based on AGI, and that can be found on line 11 of your 1040. So if you want to know what your AGI, line 11, 1040. Now also know this would be year in service or previous year. And the reason why that's important is because in 2023, you may have made 285K as a joint filer. And in 2024, you're expecting to make 350 as a joint filer. Well, you would be over this income limit for 2024. However, because of the rules, you can use your 2023 income to qualify for this. So for the income caps, this is very important, by the way. Your income can be the year it's placed in service or the previous year. Now, in addition, of course, we have the MSRP caps. These are in place. They're the same numbers that we've seen before. So vans, SUVs, and trucks, 80K, everything else, 55K. And then if we come down here to topic H, this is where things get a little bit interesting because this is where it's talking about this point of sale credit. This is the benefit that starts right now. You can transfer that tax credit to the dealer you're purchasing the vehicle from, and in doing so, you can apply that to your purchase. This is a point of sale credit, and this will reduce the cost of purchase. This does not reduce the price you pay. It is treated as cash. So basically, they can allow you to use this as straight up cash where they give you a check, or in the form of a partial payment, so partial cash and partial payment towards your car, or a total down payment for the purchase. So if you're buying a vehicle that's $47,500, you can apply the whole $7,500 to that purchase. However, taxes are based on this number, not this number down here. So this does not reduce the taxes. That's the important thing. You're going to pay taxes on $47,500 even with that $7,500 tax credit. Now, a very important clarification here. What if you do not have enough tax liability? After all, this is a non-refundable tax credit. The amount of the credits the electing taxpayer is eligible for may exceed the electing taxpayer's tax liability for the taxable year in which sale occurs, and the excess, if any, is not subject to recapture from the dealer or the buyer. This is very important. This recapture, that is in place for everything in this bill. This is non-refundable tax credit, meaning you have to have enough tax liability. However, if you elect to transfer the credit to an eligible entity, you will not be subject to recapture. Now, you still have to meet the income limits. So the 300K for joint and the 150K for individuals, that is still in place. You still have to meet those two requirements. However, your tax liability then does not matter only if you transfer this credit. However, a very important point of clarification, tax liability does not equal a tax refund. These are not the same thing. Your tax liability includes the taxes you owe throughout the year. At the end of the year, you file a tax return, which then basically vests how much you've paid in taxes throughout the year compared to what you should have paid. And then you would have either owing taxes or you would get a refund. That's a tax refund. Your tax liability includes your W-2 withholdings. So throughout the year, as you get your paycheck, if you're a W-2 employee, they are holding federal taxes in your paycheck. I have a great video explaining this in a lot more detail. So please, if you do not understand the difference between a tax refund and a tax liability, be sure to check out this video right up here where I explain this in so much more detail to help you understand what your tax liability is a lot better than probably what you're thinking. I do also want to point something out that's kind of important here. And can I basically transfer part of the credit? If I know I'm only going to get half of it, say, can I partially transfer just 50% of the credit? And the answer is no. You have to transfer everything when you do this. If you transfer the credit, it's 100% of what the vehicle qualifies for, not you, just the vehicle. So at the end of the year, as long as you are under those income caps, they're not going to pursue recapture. If you are over the income caps, they're going to take it back. You're going to owe taxes at the end of the year. Also, another important point here, do you have to transfer them? And the answer is also no. And we'll get into why you may not want to transfer and here just in a little bit, because this is kind of a silly question, it seems on face value. However, there are some situations where you wouldn't want to transfer this tax credit to a dealer. So essentially you have two options now. You can elect to take the tax credit at time of filing your taxes, or you can transfer it to the dealer. Now, there are some situations where you're not going to do that, which I said we will talk about. But first, I want to talk about the two loopholes to this tax credit. So if your income is above the threshold, there's only one way to realize part of this tax credit, and that is through leasing. As a matter of fact, if you lease a vehicle, income doesn't matter, your tax liability, where the vehicle is actually made, those rules go out the window because this is now treated as a commercial vehicle because it is being bought for the purposes of leasing. So the bank that owns that vehicle that you are leasing from is the one who gets the tax credit. So they get the $7,500, and whether they apply that $7,500 to the lease or not is completely up to them. As a matter of fact, earlier in 2023, Tesla was applying $0 to leases. It wasn't until recently that they started applying that $7,500 that they were getting for every lease to the actual lease, bringing down the payment. So when you see these super low lease payments being offered for electric cars, it is because they're applying $7,500 to that lease via these tax credits. The other loophole here is when you are transferring this tax credit to a dealer. So if you transfer this tax credit to a qualified dealer and you do not have enough tax liability to cover the full $7,500 or $3,750, this will allow you to bypass that. So if you don't have enough tax liability and you take $7,500, They are clearly saying and reiterating here again just a few days ago that they will not be pursuing recapture. So you will be able to keep that full $7,500. So if you go to your dealer, you buy a Chevy Bolt and you take that $7,500 and you put $2,000 of it towards the car and you take $5,500 of it in cash. Nobody's coming to you for that money. You're able to keep that money for the credit that was applied to the vehicle. However, if your income exceeds the caps, you will absolutely not be qualified. And it's important to note that you are the one who's going to make the attestation that you are qualified. The dealer is not going to be looking into your income. The IRS at that point of time will not be looking at anything. So you are going to make that judgment. And when you go to file your taxes, you have to report this. And that is where they're going to catch people who take this credit who are not qualified. So as long as it's tax liability that's the issue and you transfer the credit, you won't be liable for paying that back. If it is income that exceeds the limit, you will be paying this back. Now, finally, why would you not transfer this credit? It seems pretty logical that you would be exposed to way less requirements if you just transfer this to the dealer. Well, there's a couple of reasons why you may not transfer this credit. First and foremost, if the dealer is not registered. And at this time of filming, I still have not been able to confirm if Tesla has registered to be a qualified dealer. In fact, I don't believe that they actually are. And if that is the case, that means when you go to buy a Tesla, you cannot get this point of sale credit. And that is the same case for all manufacturers. So if your local dealer, whoever you're buying from, that is selling whatever EV you want, if they haven't registered for the portal, they cannot offer you the point of sale credit. So you cannot get this credit at point of sale. You have to wait until tax time. Now, throughout the year, this is going to be way more common that dealers will be registered, and the ones that aren't are going to feel a lot of pressure because you as the consumer will just go to a competitor who is registered. So this will be short-lived if they're not registered. I think that most places will understand the incentive for them to be registered, even though it doesn't get them anything necessarily financially. But basically, they will be submitting your information through the portal that the IRS has created, and the IRS will be reimbursing the dealer that $7,500 in a short period of time, very, very short period of time. But again, this is the government, but that is behind the scenes. You don't need to worry about any of that. Another reason why you might want to consider not transferring the credit is if you don't know if you're qualified. Say your income last year was over the threshold, and this year you're just not sure if your income is going to qualify. It might be best to hold off and wait to file this on your taxes. That way you know for sure, and you're only taking what you're supposed to take. So if you're at an income threshold issue, you're probably good for tax liability to cover that full $7,500. So it's just a matter of, do you have enough income? And for everybody else, it's probably best to apply this to the dealer, assuming they are registered. You can get the $7,500 as a down payment, or however you want to apply this at time of purchase. And this is huge. And this is really going to help those who qualify. Now, that said, the list of qualified vehicles has shrunk dramatically. As a matter of fact, there's only 13 vehicles on the list of qualified vehicles for 2024, at least as it sits right now. And the biggest ones to look at, the Cybertruck is no longer on the list. That doesn't mean that it's not qualified, although I guess if it's not on the list, it's not qualified. But Tesla probably hasn't registered it because they're selling these things for $20,000 Foundation Series. That is part of the MSRP. So the bottom price on a Cybertruck doesn't qualify, so it's not even registered. Same as like the Model S. It exceeds the price that it could be under, so they don't even register it for that list. I wouldn't be worried about the Cybertruck just yet. On the Model 3, however, we have lost all but the Performance Model 3. Now, this was known to be coming. The Model 3 Performance was going to retain this credit and were always qualified. So the Model 3 Performance is cheaper than a long-range Model 3, which is pretty crazy to think. So the rear-wheel drive and the long-range Model 3 both lost their credits, all of it, not just half, all of the credit. So there's going to be some pretty big changes coming for the Model 3 here in the first quarter of 2024. Otherwise, they're going to be sitting on a boatload of inventory. Over on the Model Y, the great news is everything qualifies for the full tax credit. And then, of course, the base model, Model X, the long-range Model X, all-wheel drive Model X, with no additional options other than a paint color, that does still qualify for the full $7,500 tax credit. So we're just gonna have to wait and see how long it takes for Tesla and others to become authorized to be a point of sale credit. So for those of you who are waiting for this point of sale credit, for the most part, as long as your dealer is registered, you're good to go. Congratulations, go get your car, go get your point of sale credit. For everybody else, just stick around for a few more days, a few more weeks, and let's find out when we start to see which are and are not registered and what that timing looks like. I hope that this video was helpful. I hope that you enjoyed this. Can't wait to catch you on the next one.